Now we will apply both the break of structure and the change of character on the same price action. We will start from the simple structure to the more complex one, which is closer to the action price action, and finally applying all the knowledge to analyze on the charts. So starting from the simplest form of price action. On an uptrend, price going up. Pull back to the downside, which is the higher low. Break of the high that marks the higher high. And we apply the bullish break of structure, pull back to the downside, which is a higher low. Break of the high being a higher high, and keeps going until the price breaks the past low. It breaks the higher low, which creates a lower high. And this level is the change of character or the market structure shift. Then price goes up, but is unable to break the previous higher high. And it creates a lower high. Then it breaks the previous lows, which are the lower lows. And this level becomes the bearish break of structure. So this is an important confirmation that the market has shifted from an uptrend into a downtrend. So the most likely scenario is that the market will continue the recently created downtrend. By price, pulling back to the upside, not managing to break the last highs. And it becomes a lower high. And soon after break of the lows. So another bearish break of structure. And price action constantly repeats until the market shows an intention to reverse into an uptrend. And that indication of a shift again into an uptrend is a change of character that breaks the lower high. So it creates a higher high. Then a pullback to the downside that stays above the previous lows. So it created a higher low. So essentially, it printed a market structure of an uptrend. And then the price action should be printing bullish breaks of structure. Now from the downtrend, price going down, pull back to the upside, breaks the lows and prints a bearish break of structure. Pull back to the upside, break of the lows, bearish break of structure, and it keeps going until it breaks the lower high, which creates a higher high, and it maintains above the lower low by creating a higher low. This is change of character. And if price breaks the higher high and still maintains above the last low, it basically confirms the bullish break of structure that has shifted the market trend from a downtrend into an uptrend. And the bullish breaks of structure keep printing until the price breaks the lows, while not being able to break the highs. So it essentially printed a change of character. And the confirmation of the reversal happens when the price pulls back again to the upside, doesn't manage to break the highs, and instead it breaks the lows. So this creates a bearish break of structure, and the market has essentially reversed again. So this is a presentation how a market can shift from a downtrend into an uptrend and into downtrend again. Now into the more complex price action, in which after we will analyze on a candlestick chart, upside pullback, break of the high that marks the following bullish break of structure. Now we enter into the more complex price action, the price pulls back. So remember that the pullback on an uptrend is a downtrend on the lower time frames. So knowing that we can also apply the breaks and shift concept on this price action. For example, here we have a bearish break of structure caused by the low time frame price breaking down the last lows, essentially creating lower lows. Then price pulls back to the upside and stays below the last high, meaning that it created another lower high, then break of the last lows by creating another lower lows, so another bearish break of structure. So what often happens is when price respects the high time frame trend, in this case, an uptrend. The low time frame trend aligns with the high time frame trend and moves into the same direction, which in this case, it's to the upside. This break to the upside is met by a change of character inside the pullback. This type of change of character is named an internal change of character, or an internal market structure shift. So this indicates that the low time frame trend could soon reverse to follow the high time frame trend. The confirmation of the reversal is done by price not being able to break the past low. So by creating a higher low and breaking the past high by creating a higher high. And this confirms an internal bullish break of structure in which price follows through the high time frame and continues the macro trend. And from the complex downtrend price action, here we will also apply complex reversals. Price going down and pulls back to the upside. The pullback is a low time frame uptrend with the opposite market structure from the higher time frame price action. So the price forms higher highs and higher lows inside the lower time frame. With internal bullish breaks of structure, this pattern repeats until the price is unable to break the last higher high inside the low time frame, and it goes down breaking the last higher low, which price forms a lower high and lower low. so it forms the fundamental price movement of a downtrend. This changes the character by shifting the internal market trend, and essentially the internal price aligns with the high time frame moving into the direction of the main trend, which is a downtrend, and it breaks the high time frame low. So it created a bearish break of structure on the high time frame, and this price action typically repeats internally. So again, pull back to the upside. Internal higher highs and internal higher lows that forms the internal bullish breaks of structure up until the price can't break the last higher high. And it goes break the last higher low, which creates a lower high and a lower low. This has formed an internal bearish change of character that aligned the low time frame trend with the high time frame trend essentially moving the same way, which is to the downside. So basically, the price action of the first part of the structure repeats itself. That is because the price has yet again changed character into a bearish standpoint. So that means that we have a pullback to the upside, a high that is not able to break the last high, meaning it has set a new lower high, and it breaks the last lower low, setting a new lower low with its own bearish break of structure to the downside. And once again, pullback to the upside, can't break the last high, which sets the price as a new lower high, then breaks the last lower low, and sets a new lower low by breaking down, and leaving another bearish break of structure. And the same process happens on the next one. We can see here that price breaks the last major or external low, which creates a new external bearish break of structure. So it confirms the breakdown of the last external lower low, and it is looking to create a new lower low in the high time frame. So basically the high time frame and low time frame were aligned up until this point, where the market was unable to break the last external low, and enters into a low time frame uptrend by breaking the previous internal lower low, which marks a new internal higher low, and that validates the new internal bullish change of character, from which price action confirms the uptrend by continuing the uptrend price structure. So by creating internal higher highs and internal higher lows with their own internal bullish breaks of structure, and the price goes up to break the last external lower high, and by breaking it, sets a new external higher high with its own external bullish change of character. We have marked with the purple dots every external level, with the blue dots every internal level. The price action from above, so the black lines, is the low time frame price action, and the one below with the orange lines is the high time frame price action. The direction and price is the same in both time frames, only the action and structure we see is different, and the structure is very important for traders to analyze setups.